you think it's going down. Sometimes that precludes you from being able to trade them in your IRA because you can't short stocks or some of the indexes, but you can buy. And so they've set up ETFs that essentially are short, but they go up if the market goes down. The IRA in your, or the ETF rather, in your IRA without any consequences. Now, some of the ones that we know about and that are very well known, like the S&P, the spiders, you have the Dow with the diamonds, you have the NASDAQ with the cubes, or the Qs as they're called. These are very active, very liquid markets for any size of trading need. So what you basically have done is if you get into the ETF, you have narrowed your choice of markets. For example, if you trade the stock market, you have thousands of stocks from which to choose, and you never know for sure, which is one that is going to go up or down, and which is correct, and who's accounting correctly, and all the kinds of things that are happening in the stock market. You don't have to worry about the individual stock situations, but you still have, several hundreds of ETFs from which to choose. You have to then determine which sector, which market, which ones are the ones that are going to move. But for the most part, ETFs that you would be trading are pretty actively traded and pretty liquid, so you don't have to worry about it so much. Now the question then is, if you have all of these ETFs available to you and to trade, how do you trade them? For that, I'm going to turn to some of the indicators from Vantage Point Intermarket Analysis software. I need to make it clear first, this is the software that I'm using, but I'm not a salesman. I'm not selling a product. I'm not receiving money for products sold. I'm more interested in trading and developing trading strategies, but I do like to feature those products that I personally use and benefit from, and Vantage Point happens to be one of those tools. Now, about Vantage Point, another point is that you need to be aware that its data is based upon inter-market analysis. As you know, markets are likely to influence each other. The neural network process determines the 25 markets that have the most influence on the target market, and then that influence is reflected in a set of intermarket data that is used to develop the indicators. The price data for Vantage Point's predictive indicators comes from typical prices. That's the average of the high, the low, and the close. When you have most programs and most indicators, they use only the close. But computer analysis has determined that typical prices are the most useful and indicative of future results by watching what they're doing. You can analyze, again, not for the long term for the most part, although there are some long-term implications with ETFs, as we'll talk about in a little bit, but you are looking primarily at a market forecast, a price direction a day or several days ahead, depending upon the length of the moving averages being used or whatever indicator that you're using. Now we're going to do a little sharing here with you and look at some of the a chart of the Vantage Point active software. Vantage Point software, as I mentioned, is very useful because it helps you in several different ways. You're not limited to one indicator. You have enough indicators from which you can choose. It can suit almost everybody. And what I'm showing you here is just an example of a longer term chart. This goes back at least a couple of years, and it shows you, or at least a year here, 2 years away it looks like. It shows you a chart here so that you get kind of the big picture perspective of where you're at. You always kind of need to know, where are you at? What's the neighborhood that you're operating in? When you look at this list over here, the list of charts over here, let's come back to this. First, let's talk a little bit about what we can do with this chart and some of the properties that we can get on this chart. We're going to first bring in the medium-term crossover indicator. Now, the medium-term crossover, and we're going to cut this time way back to, let's say, 6 months, so you can get kind of a feel for what it's telling you. You will see that we have a predicted medium-term moving average. That's the blue line that you see there, and a actual moving average, a medium-term moving average. That's the black line. As this market moves, it will get some crossover situations. You can see right here, some of them very useful, but In some cases, what you would like to have is a little bit more precise information because you don't know for sure, at what point exactly are you buying, after you get this signal here. But, you'll see a signal here that is pretty significant when you start comparing them with some other indicators that Vantage Point provides. By the way, I have picked, in this case, the healthcare because you might be surprised. Everybody has talked about healthcare in Congress and all the dire predictions about what was going to happen to it. And as you can see, the trend is pretty strong, to the surprise of many different people. But let's bring in our other indicators and show you a couple of other things, and then we'll go to other charts to see how we can apply those to other ETFs. We're going to bring in the predicted neural index, and we're going to bring in the predicted differences, as they're called. I'm going to switch to kind of take a picture of this screen so we can talk about this a little bit more in more detail to show you a little bit about what happens on the chart and when you can determine what it is you're going to be doing. You should have this same chart that I just showed you on the screen. We're going to show you a couple of the things about this particular vantage point because of the different indicators that are available. Now, the first thing I want to show you is, again, highlight some of these various crossover points. Blue line above the black line, you're long. It's pretty simple, pretty basic, but you have to know exactly where. So you always want to, kind of be in tune. Here's the blue line over the black line. In this case here, you have blue line dropping below the black line, so that's indicating that you need to be short. Now this is fairly standard moving average types of things, so you need to look at the environment, see what kind of a thing are you operating with, because that is alone maybe not exactly the signal that you want to have. So what we're going to be looking at, and we brought in the predicted neural index. The predicted neural index is a comparison of 2 3-day moving averages against each other, and it projects the price direction of typical prices, remember the average of high-low close, 2 days ahead. Pretty basic, pretty simple. If it says 1.0, it's bullish. If it says 0, it's bearish. So there's no ifs, ands, or buts. It's either up, it's either down. The indication is pretty clear. Also, we have the blue line and the green line down here below, and you will see that there are some crossover situations there. These are the predicted differences. And when we talk about differences, we're talking about different moving averages where we're comparing the predicted moving average and the actual moving average. The green one